Hey guys, what's going on? What's going on? What's going on? Street Trading here. Another video lesson for everybody looking at a 15-minute chart of Dish Network consumer cyclical sector. All right, guys, let's get into it. So, as you can see, they did a bit of cliff diving in yesterday's session, but before that, you can see how there's been some selling pressure heading up to obviously Wednesday's session. Slowly it's been sliding. Volume wasn't really coming in, but you're seeing clearly technically what's going on. So, looking back, obviously there was footprints if you're obviously studying these guys, right? We weren't. Didn't matter, right? It didn't matter. We're active day traders. So we look at specific moves. We look at the catalyst behind the specific move. And then we line up what we do. If it ticks all of our boxes, we get involved. If it does not, we move on. We keep things very, 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 very simple. What we do on a daily basis is a rinse and repeat. It's a rinse and repeat. So moving forward, you can see when things set up the way you're looking at this chart right here is why we kind of zoomed out a little bit so you can see what we're seeing. There's levels that are acting as magnets. There was no surprise that this thing faded to nearly 31. No surprise. And that was our target. Let's get into the reasoning behind. Obviously, well, before we move forward, these guys needed cash. All right, these guys needed cash. Put up, well, we're going to get into the details shortly. But they needed cash, and obviously that brought up some concern, shook out some long terms, and we're going to get involved when you have that emotion, right? When you have that emotion there, you have the shorts covering their short. You have your bearish covering their short sells after the gap down. You have the panics. You have the bottom feeders, and that's all recipe for continued selling. And that's exactly what had happened after the initial gap down. We ended up taking a couple fucking hits in the beginning of the session trying to anticipate this curl, as you can see. And that's okay. And it happens all the time. All the time. We'll take 1, 2, 3 hits. We've taken 4 hits. But they're so insignificant. They're so small. It's irrelevant. It doesn't matter. That's why we keep our risk perimeter so tight. And we don't care taking 2, 3, 4 hits. That's okay. Because when the move definitely happens, wipes out all those losses, and we're good to go. All right? We're good to go. So there's a reason why we're very specific on what we trade, what we look at, because the probabilities are far in our favor that it's going to unfold how we anticipate it to unfold, right? And this was a perfect example. We got in a little early, a couple of times, but that's okay. That's okay. Took a few L's, no big deal. Then the W wiped it all out. So anyway, enough of the chatter. Let's get into the details, why this thing faded out, the catalyst behind it, levels we risk, and move on. All right, guys, let's get into it here.